This is the Collecting Real Estate Podcast. I'm your host, Stephen Purse, here with your co-host, Bill Hamill.
I'm somewhat more comfortable collecting real estate than I am collecting other stuff.
This is the Collecting Real Estate Podcast. I'm your host, Stephen Purse, here with your co-host, Bill Hamill. This morning, we interviewed Isaac Phillips with Generational Capital. This was our first recording that went over an hour long. Bill, what'd you think?
Yeah, we were planning the exit at our normal, 45 minutes, but I've got to know Isaac rather well over the past couple years, and we share the hobby of marathon endurance running, and I guess that kept us busy for the last 20 minutes.
So you get about 30, 40 minutes of real estate, and then you get about 20, 30 minutes of endurance running. But I think the overall theme through the whole hour is overcoming adversity.
Overcoming adversity, suffering, and mindset.
That's what it all comes down to. Isaac Phillips, thank you for being here this morning. Really excited to hear more about your story. Let's get right into it. How did you get into real estate?
I got into real estate by default. I purchased my first house at the end of 2008, closed in September of '08, right before the market went belly side up. So I paid a high price. And then back in 2010, 2011, that house was in North Carolina. I was ready to move to Omaha, Nebraska for some work stuff and realized that I was going to take a beating on the house. So I decided rather than take that beating and take cash to the closing, I would just go ahead and rent it out. So I rented it out all the way up until 2015. So about 5 years, one tenant. It was not a moneymaker. It gave me some cool tax write-offs, and honestly, I had to put $75 with it every month to make the mortgage payment. But despite all that, I got a sneak peek of the tax benefits and everything else and the long-term wealth that could be built by it because I sold it in 15. I broke even. I got all my money that I had put into it to put it back on the market. Everything that I had in it, I got back, and I had the tax write-offs over those few years. So at that point, I realized that not only did I enjoy it, but I thought, man, if you could do that by accident, imagine what you could do intentionally going after it, buying the house with that in mind from the first place. So that kind of gave me the appetite for it. And then I pushed that aside. I was finishing my degree at the time and had a young family that I had just started. So I pushed that aside and waited until I graduated, finished the degree in 2019, and I had the resources and bandwidth to go back after it. And then I decided to go back to real estate and do it intentionally this time.
Awesome. So you bought that single family and stumbled into being a landlord. I hear that story quite a bit.
Yes.
And you see what being a landlord's all about, not only managing a tenant, but come tax time, you're able to see the tax benefits that you enjoy. And for you, it sounded like it was something that you wanted to pursue. So leading up to 2019 and at 2019, what was your mindset as far as, okay, I'm going to escalate this real estate mindset into what? What was your thoughts of the next asset you were going to purchase?
So I had started 2019. I didn't really get much bandwidth to look into it. It was the end of 19 when I graduated. So I walked graduation December 14th of 2019. Then in January, I started hitting bigger pockets hardcore. Just took the normal real estate learner route that most of us do as newbies and got into bigger pockets. And I knew I didn't want to do single family. I knew that I didn't have the bandwidth to flip houses. I knew that was a full-time job, and my current job at the time would not allow me the flexibility to do that. So I immediately went to multifamily. So I wanted at least a quad for my first place. I knew that it would take me a while to find the deal, and it did. It took me the better part of a year to find 5 different properties, get them under contract, and get one across the finish line in November of 2020. So when I looked at it, I was like, man, it took me 6 or 7 months to find this, and even longer to execute the business plan after I purchased it. So even if fourplex wasn't enough, I just knew that scalability wasn't there for my goals, that it was going to take me forever to get where I wanted to go, and it just wasn't going to scale at that level. But I bought the fourplex with the mindset that I could test my theory on it and say, hey, man, because I am an all-in kind of guy, like, hey, I can jump into this, test it, and take some lumps on a small scale, learn my lessons on a small scale where I can't really hurt myself that much financially, and everything will be okay. And if I prove my theory out that I actually enjoy it and like it, then I can jump in even farther and go into bigger stuff. So I did that. So I bought it, made some mistakes, still paying some of those mistakes off, as you say, and executing the business plan on it. But I liked it. And then in the process of doing it, I also realized, I think the day I fired my property manager, I realized that everything that I had done in my career up to this point in operational management had set me up really, really well and translated really well into what I was doing in real estate. So then I went to Jake and Gino in April 2021. As I looked for my 4 unit properties, I'd stumbled across this LLC called Villanautics, which I found out was owned by Vincent Gethings. And we had some mutual acquaintances in the space and everything. So I started talking to them and did your typical pockets stalking of Vince to find out what he was about and everything, and learned more about him. Learned about the Jake and Gino program as he was posting how he had joined, and I could see the hockey stick trajectory on his growth curve where he'd gotten in. I realized we had similar work ethic, and that if he could do it, and this program was the catalyst to his growth curve, that's the program I wanted to be a part of. So I didn't really shop it around. I looked at a few different ones, but there was no need for me to shop it around when I had him as the poster child for the program. And I knew he was coming back to Midland and he was going to be right there in my backyard. So it was pretty simple. And for me, when the time came, I spent the $20,000 and joined Jake and Gino. And the rest, they say, is history.
I like how you say you went into a quad thinking it was a small scale. I think there's most people out there, they get a single family house and then going to a quad, that's a massive jump for them. That's a big
Right.
challenge to take on. You're looking at it as, oh, this is the small scale. I'll go into the big stuff later on. And I think having that perspective is so important in real estate if you do want to scale on that massive level. Can you tell us more about that quad? I'm interested in, where was it? What did the numbers look
Yeah.
like? What was your business plan on it?
It was a 3% deal, if you know the bigger pockets rule, right? So bigger pockets is 1% deal is the minimum. Anything above that is gravy. And as I was looking at duplexes and stuff, I realized your traditional duplex model, you need to be at least 2% because you're going to be floating the water and the snow removal, the landscaping and stuff like that. So then as I looked at this quad, it's a total Class C property all day long. Paid $70,000 for it. It was tons of deferred maintenance and stuff like that. As your typical owner didn't reinvest anything at all. They had bought it for $50,000, I think, and just sucked the money out of it over the years. So went in there. There wasn't really any rent roll per se. You don't really run into that on a 4 unit anyways. I did have leases. I was able to look at them, and where my biggest mistake was in my underwriting was I never accounted for the capital injection that I was going to have to do in those unit turns. I thought the typical bigger pockets method of shoestringing it along. I had 10% set aside for repairs and maintenance, 10% for capex. I just thought that I would shoestring it along organically, and I wouldn't have to do any major capital injections, and I was wrong. So I think if you read books, they typically say when you buy a property that's a multifamily and reposition it, you can expect to turn about 75% of the units. And so 1 out of every 4 tenants will actually stay with your business plan. The rest will leave. And this proved itself very true in my case. So over the next year, I injected about $60,000 into it. Only about 15 of that is what I had budgeted. So I knew that I already had a contractor, I'd already gotten scope of work and stuff like that. But I never forecasted 60K. I forecasted 15. So really, to say all that I haven't made money per se on the property, and everything that I have in it, I'll get back because I bought it right. But as far as cash flow and stuff like that, I bought myself a great learning opportunity to get a cool tax write-off, and I was able to leverage the CARES Act to pull money out of my 401k to do that property. So that's what we used to pull the money out, and I already had money setting aside for it as well, and that's where I funded the rest of the repairs and everything. But yeah, still own it. Actually repositioning the last unit right now, and then I'll turn around and sell it probably this year because it's not something I want to own long term. And now that I'm more experienced and more knowledgeable about different asset classes, I'd rather spend that money in those all day long than to continue to deal with it. It's always going to be a C-class property no matter how much I fix it up.
Yeah, we're all talking about learning from our mistakes regularly.
Absolutely.
That's where we find so much success is learning from our mistakes. And I see that you made, that big mistake on that CapEx projection. Fortunately, what we also talk about is buying right.
Yep.
So if anything happens, any pitfalls happen, you're insulated from anything major because you bought properly. You mentioned the property manager, you fired a property manager. Was that another
Yes,
mistake? Talk about
that
that.
was a huge mistake. So it's always great to get referrals from peers, from other investors and stuff, but you should always verify the referrals because we all have different criteria. I did not do that. So I had a friend that was another real estate owner. He also managed about 300 units as third party manager at one point. And he recommended this property manager, talked him up, said he was great. I've been to this guy's house before. He's an engineer. He's, a personality and everything. So I thought we were very similar in our outlooks from what I knew of him and everything. What I should have done was I should have gone and driven some of his properties that this guy manages before I had simply taken his referral and ran with it, and I didn't. I mean, the property manager, he was a good manager in a lot of things. The property managers have one thing in their toolbox that they're really good at. And when you take them out of that one area, that one asset class or whatever, they're not as good. This guy's strong suit was a single family C class home. That was his strong suit, maybe a duplex. Put him into 4 units, ask him to plan ahead, ask him to give you income statements at the end of the month, all these different things, forget it. He had 400 units under management and he had 2 full-time employees that he paid $12 an hour to use their own personal vehicles and their own personal tools. And so, needless to say, it didn't go very well. So his standards and my standards were way at opposite ends of the spectrum. And when you get to that point, you have to realize that you have to change your expectations or you're trying to force him to change who he is. He's been doing this 40 years. He's got a nice niche for himself. The reality is I brought the wrong tool to the job. So I'm not going to change my expectations. I can't expect him to change his. And it was one of those where the frustrations were mounting. And so I just called him on it and said, hey, this isn't really going to work for us. And I'm looking for something different than what you're able to provide, and I don't think it's the best partnership. So he was very offended by it. I thought he'd be equally frustrated as I was, so I thought that he would already have that coming to the table. He didn't. He was blown away by it. I had already planned my backup. I didn't make the same mistake twice. I already had my other guy out there. He had already told me what he thought he could get for it. I already checked his referrals and background and stuff like that. So I already had that bridge built. I didn't just leave it hanging. But yeah, that was my mistake. So this guy, the good things about this property manager that I fired was he showed up to 4 different properties that I put under contract. He walked the properties with me. He would tell me what he thought about them, where he saw the pitfalls coming. There were a lot of pros to him, but his niche was single families or duplexes. And once you took him out of that and you expected good quality turns under budget, decent times and stuff like that, you could forget it. I couldn't get an income statement from him every month. So, and he was calling me, asking me for tenants contact info and stuff like that when he had to reach out to him. It just wasn't worth it. He was the cheapest, but you get what you pay for.
Another learning experience with the property. Bill, I knew you weren't gonna miss that mention of firing the property manager. Something we all deal with. And that's a great point that you have to vet a vendor or a contractor like you would an employee and have those expectations beforehand of what you want, whether it's that monthly income statement or walking 5 properties, and make sure you're on the same page.
Yep.
So it sounds like you're in a completely different league now in this Jake and Gino community, looking at scaling to a massive degree. Tell us about that journey now that you're in this Jake and Gino community looking for large assets.
Yeah, absolutely. So I joined April of 2021, the end of April. But the reality was I'd also made a huge career change at the same time. So I'd actually jumped out of a career that I was very secure in and had a lot of flexibility and everything and used my degree and jumped out into totally different industry. So even though I joined in April of 2021, the reality was I really didn't get to use Jake and Gino the way that I wanted to or jump in with both feet because I was so constrained on time that all I could do, if I slept 6 hours, this will tell you how nerdy I can be sometimes. I had mapped out my time before I joined Jake and Gino, and I figured out if I slept 6 hours a night, I could free up 15 hours a week to. And so my question for Vince was, "Hey man, with 15 hours a week, am I gonna get my money's worth out of Jake and Gino, or should I just hold?" He's like, "No." He's like, "You can get your money's worth as long as you can find other people that'll put in 15 hours with you, make a team and everything." So I jumped in. I learned a lot. I met a lot of awesome people. I started building those relationships. But as far as getting boots on the ground traction, I wasn't able to do a lot of that because the reality was, as Bill Ham later pointed out, the 15 hours that I had, they weren't prime time. They were, 8 to 10:30 p.m. or early in the morning. Well, you're not going to talk to a broker at that point. You can't go tour properties then. And so 15 hours was great for building relationships and doing learning, but that was about all I was able to accomplish in the first 9 months. So lots of cool relationships, tons of learning, but the application of the learning wasn't really there until about November, December last year. So I pivoted into real estate full time, which is a whole other story. But now I'm director of operations for another investor over his portfolio. So I run that day in and day out, and I actually get to live and breathe real estate all day long. And I'm right inside of my sweet spot as far as my skill set, my passions, and everything else. And so I've gotten more traction since then than I did in the previous 9 months as far as Jake and Gino goes. I was able to get into passive investing. So again, back to what we were saying, to do something and be able to offer something to someone else, you have to understand it. So I had a theory that I wanted to invest into multifamily assets passively first. And my reasons were I wanted to build instant credibility because I could be able to throw out a unit count there to a broker and they wouldn't care one way or the other whether I was passive or active. And I also wanted to be able to seed that conveyor belt that we talk about so that I could have stuff coming back in 3 years later when my knowledge and my deal flow was there. I could, redistribute that capital. And then the third thing was I actually wanted to get my hands dirty. So I went into two different syndications. One of them was 130 unit in Oklahoma City. That was completely passive. And then one was with Vince, my accountability coach. And I told him, I was like, I want the dirtiest deal. I want something with hair on it. I don't want a clean deal because you don't learn anything off a clean deal. So we bought a C-class asset in Roanoke, Virginia, and doubling the rent rates. The place was called Little Mexico or Murder Town. That's the nickname that it had in that community. And so my thing for Vince was, hey man, I'll jump in on this with you and I'll invest with you, but I just want to be a fly on the wall. It's like I just want to get my hands dirty. I don't expect to be a GP title or anything. I just want to be there for everything that I can be there for. I'll fly down there and do the property closing and take over on my own dime, all that stuff. I don't expect to have any say. I just want to get my hands dirty so I can learn it. So we did. He was nice enough. I sat in on the meetings. We did $1.5 million in capex that we're still working through now, right as the supply chain stuff really started happening. So there's been tons of good learnings there. Flew down there for the property takeover, helped walk contractors around and post the notices on people's doors and interact with the tenants a little bit, stuff like that. So learned a ton. And then I jumped into a JV on a Airbnb in Illinois. So I did those three, deployed 100,000 last year into three different passive investments, and I accomplished all three of those goals that I wanted to. And that's really all I accomplished during my first 9 months with Jake and Gino.
Wow, that story is fantastic. I love this. I just have to, the property manager he hired was doing 400 units. Stephen will like this because we've heard this before. With two employees with weed whackers hanging outside of the back of their trunk.
Yes.
You realized that wasn't for you.
No.
That's not the management that you're looking for. And now you're the director of operations on a professional outfit. So you're seeing how an asset should be managed professionally. So you went from one extreme to the other.
Yeah.
And at the same time, you joined the mentorship Jake and Gino using Vince Gethings, who's a very, very successful guy, as your proof of concept. Tell us, I'm not sure where your expertise is at this point. I thought that you were going to say you're great at underwriting because of those 15 hours of off time, but now you're director of operations. What is your favorite focus as far as that deal? Do you like underwriting, operations? Are you raising money? What's your focus right now?
Yeah, so it's interesting you say that. My background has always been operations management. So I used to manage rail operations for large customers, like Fortune 100 customers, and usually would have 30-ish, 35 team members and large operations, right? Multi-million-dollar operations. So I would reposition the operations. Typically, they had bad safety culture, bad human resources culture, stuff like that, or they weren't hitting their numbers financially. And so usually within a 2-year time frame, we could right the ship, put new leadership in place, and do a transitional plan and then move on. So that's my background. I never thought about how well that could interplay into real estate because I didn't have the exposure in real estate. I never was involved in real estate in the operational level. And then once I got in there and I fired the property manager and I realized that everything that I had done in the past professionally totally prepared me for everything. And didn't throw me off at all. I was ready on cue. I was able to handle the confrontation without any issues. I already had my bridge and my replacement and transition plan built, all that stuff. So that was eye-opening for me, and I had never thought about how the two could interplay. So fast forward now, right? So I made that career transition I mentioned to you. miserable, totally out of my element. Everything that makes me who I am as a person, high drive, looking for efficiency, trying to add value, worked against me in that environment. I literally had a one-on-one review one week where they told me that I said thank you too much and I was too positive and it came across as condescending. And so that really made me think about it at the end of the day. It's like, man, what am I doing here? Like I had fixated, this is another mistake. I had fixated on this one company that I had dated, if you will, for lack of a better term, for 4 or 5 years as I finished my degree. Great company, nothing wrong with them at all. But over that same 4 or 5 years, my goals had changed drastically. And because I'm an all in kind of guy and I always finish what I committed on, I never took my eye off that mark at all.
So I jumped all into the company that I'd been pursuing that whole time, right during the time I was doing my degree. But I never stopped to think about the fact that my goals had changed drastically from where I was before, and this was no longer really the best option for me. So once I got there and realized that, I started looking elsewhere. So I started planning bridges to get me towards my end goal of doing real estate full time, having more flexibility of my time and my pursuits, and now that I knew that my operational management side could translate well into the real estate side, I started looking at that. So I had built relationships through Bigger Pockets. I started a RIA meeting before I bought my first property. I started one in my local community because we didn't have one, and I reached out on Bigger Pockets and said, "Hey, I'm starting one here. Would you guys be interested?" So we had probably 20 people in the local community that started attending, and several interactions were made online on Bigger Pockets during that time. Then my commercial lender that I used for the fourplex had referred me to another person in the development space here. He's like, "Hey, you should meet Wayne. Wayne's a great guy. You guys have a lot of similarities in your outlook and what you're trying to accomplish." So I was like, "Sure." So he set me up with a referral. I met Wayne online and phone calls and stuff. Never really even met him in person because it was all during COVID. He's like, in September, he reaches out. He's like, "Hey, Isaac, I've got this friend, developer, who's looking for a director of operations." He's like, "I think that you would be a slam dunk for it, but I'm not sure if you're interested or not." So I was like, "Oh yeah, I'll always take a look at it, right?" So send it over to me, and he sent it over. I told my wife, I was like, "I don't really see this being a possibility at all. There's no way they can afford me. This guy's not that big of an operation." I was like, it'd be a conflict of interest. I'd be building his business, and I wouldn't be able to build my own, and there'd be tons of things that would not work, right? But I was like, hey, out of the fact that there's mutual acquaintances that brought it together, I'll at least see it through the interview process, and then I'll bow out. So I made out my portfolio, took it into the interview, talked to him. At this point, I'd been through a couple of Jake and Gino conferences. So I've been through the Manage Right conference and I think one of the Buy Right conferences. So we're sitting there and he's describing what he's looking for. And they did the normal interview stuff, the normal HR questions. Towards the end of it, I got to the end of the interview and I said, "Hey, I just wanted to take a moment and thank you guys." I said, "I really have a lot of appreciation for the relationships that brought us together here and for everything you've accomplished." I said, "The only way that I see this being a fit for me would be XYZ," right? I'd already decided the non negotiables. Like, I have to chase my own dreams. There can't be any conflict of interest. I want some mentorship out of this, all these different things. So I told him that, and I said, "I think you benefit a lot from the investment that I made in my own education with Jake and Gino and other stuff like that. There's a lot of things that I could do to help you run your portfolio better based on what you've outlined here. But I'm not sure that this would be a fit for you." And he said yes to every single thing that I threw out there as non-negotiables. So I walked away from that interview thinking, going in there, I was praying, "Hey, Lord, help me find a good way to exit this and keep the relationships intact and everything and let everybody down gently." And walking away from it, my head was spinning like, man, what just happened? So he said, "Hey, I want you to meet the team first before we commit to anything and make sure there's a good culture fit there." Met the team a week later. He had already handed all my stuff, my portfolio out to them so they could ask me questions. And then that was September. So November, I started with him. Started on a pair of crutches because I just put that cast on for 8 weeks trying to not have to go through surgery. And yeah, it's been amazing. So a lot of the stuff that I've learned in Jake and Gino combined with my operational management experience in the past and everything has been huge. So I've implemented move-in fees, non-refundable move-in fees, pre-leasing, a whole bunch of other stuff that we're constantly trying to dial in better. So he's got a lot of industrial, triple net commercial stuff with financial services and medical buildings, multifamily, ground up developments, redevelopment with estate money, grant money and stuff like that. So it's fun. I get to do what I enjoy doing every day. I've never dreaded a day of work since. And my only fear has been I don't want to be too comfortable because I don't want to slow my personal growth and my own stuff just because I enjoy what I'm doing now for him, right? And I haven't had that. I don't think that'll happen.
It's a great story. There's nothing wrong with working a W-2 and pursuing your dreams and your entrepreneurial journey on the side. But if you want those huge results, you have to find a way to be in that world during the day. That's
Yes.
what you described here. it can be the operations, it could be starting an HVAC
Yep.
company, but something just to put you in that real estate space.
Correct.
I think that applies to any industry. If you want to go to that big scale, you have to be in it all day, every day.
Absolutely.
Is is your operations portfolio in your local area in
Yeah.
Michigan, and is that also where you're looking to scale now with your
So
syndications moving
yeah,
forward?
his portfolio is all right here local. We don't cross each other at all. Like his buy box and my buy box are totally different. He wants to stay in the small tier 4 communities because he's very good at that space. He's got connections. That's where he's from. And he has no competition. So when you're in a small tier 4 community where there's less than 5,000 people in a town, I mean, you set the rent standards. When you put new product online and you redevelopment, you own that space. Nobody's going to come knocking on your door trying to compete with you for it. So it works really well for him. And that's where he's made his business. It's not what I'm interested in. So we don't compete at all. Like he'll send me multifamily stuff when he sees a listing come across, and I'll send him triple net stuff if I know he's looking to 1031 some money into a deal or whatever. We don't that doesn't mess up at all. And then on the flip side, we work on a very good relationship with just managing deliverables. So I know what he needs. It doesn't matter if like last night I was sending out quarterly investment reports to investors and different business entities that he owns. I was doing that at 10:30 last night. Could I have done that during the day? Sure, but I was looking at apartment complexes at 12 o'clock during the day that were my business. So it doesn't really matter as long as I'm hitting everything that I need to and keeping his team on track, keeping his business going where it needs to. It's very fluid. I can bounce back and forth from mine to his just like that based on which one needs me the most at that time. And he knows that he's taking priority out of the two. Like I'm very well aware that he's number one priority and mine is second place.
No, it sounds like a great relationship. That's what it's all about. I know
It is.
you've probably created a lot of fantastic relationships in Jake and Gino as well, because we all know that building relationships and networking is going to get us to that next point. We never know what that next deal looks like. What I want to dig in, I can't avoid when you mentioned to Vince that you wanted a dirty deal. You never hear that. Tell us
Yeah,
about that dirty deal. What did you learn from that?
a lot. So yeah, I guess making more sense out of that because you never hear that. That's a great point. Most people get away from adversity as fast as they can. For whatever reason, I've had adverse conditions most of my time coming up from like 14 on up. So as much as that it sucks to deal with, that's where you learn the most. So when things go right, there's not as much learning to get from something that went well. I mean, you could say, yes, I'll look over my shoulder, pat myself on the back. Yep, I planned that properly. And those are all good. I'm not discounting that. That's great learning as well. But if you can take the adversity, you get stretched so much farther during something that's not going according to plan. And you learn so much from that, drinking from the fire hydrant, for lack of a better term. If you can stand that, if you can handle that mentally. So I know I can figure out how to run a deal right when everything falls together perfectly, but very seldom does that happen. And I had already learned that in the 4 unit as well, right? So I had some things there that I'd already learned. So it didn't make sense for me to pursue something that was a clean cut deal because then when I buy a deal and the wheels fall off of it, I'm not going to know how to handle it. So it made more sense for me to pursue something that was going to be ugly from the get go. I mean, if you can manage an ugly one, you can do fine with one that is clean and works out perfect. So that's kind of the logic that I was approaching it from. Yeah, so what went wrong? So yeah, the closing never happened. Didn't happen on the Friday that was supposed to. At 3 o'clock in the morning when I'm picking Vince up at his house, he'd gotten an email at 1 o'clock from the attorney, the seller's attorney, saying it's not going to close. We're not doing it today. They just weren't motivated. This is a direct to seller deal that had taken over a year already to get to the point where it was at. So that happened. We got there. We tried to put everything back together and close on that Friday, but it wasn't going to happen. So we were doing the property takeover Friday and Saturday without even owning the property, and we were told by the seller that hey, you're not going to get the keys until the closing happens and everything. But sure, you can show up at my property and go ahead and post your notices and do your contractor walks like you were planning on doing. You just can't access any of the units because you don't have the keys, right? So Friday night, we're sneaking around, posting notices on doors, trying to creep through hallways without making ourselves too obvious. And then Saturday morning, we're meeting back out there with contractors, walking the property that we don't actually own yet and haven't closed on, walking them around, looking at the CapEx projects. We already had all the stuff scheduled ahead of time, so there wasn't any way that you could postpone it all. And then it was cool seeing the tenants when you're buying value add properties, true value add properties like that. These people run this place into the ground. That's just the normal cycle that it goes through. And even though the tenants are paying half of what market rate is, you still have an obligation to that tenant to uphold your end of the deal. But these owners are not, right? So case in point, a Hispanic guy comes across the parking lot speaking broken English, pointing at me. He's got his posted notice in his hand for the property changeover. He's pointing at me. He's like, you. And I was like, yep, yep. It's like secretly thinking, no, maybe that should not be me. I should point him to somebody else. But he comes over and he's reading through the top sheet and everything. And he's just asking about, hey, is this who we contact? All these different things. So the second page of that property takeover list has give us your top 3 maintenance issues. And on there, he's got that his stove hasn't worked for a year, and his AC freezes every time he tries to run it. And it's like, man, how sad is that? That this guy pays. I mean, who cares if he's only paying $500 a month when he should be paying 12? The reality is, you still owed him to have that stove working, and he hasn't had it for all this time. So that's the cool thing about real estate, is you can actually engineer win-win transactions for everybody. Yes, he's likely to be displaced because he'll never be able to come up to the full market rent after we've turned that unit. But at the same time, he deserves to be taken care of properly for what he pays. So maybe he gets put in a light tech property for $800 a month, but at least his stove's going to work and the AC is going to do everything that it should. So you're actually adding value to everybody in the transaction, because we're able to fix his stove during the time that he's there. We're able to buy a seller out of a property that's mismanaged and ran into the ground, but hey, they made their money during the 20 years they owned it, and it served their goals. And oh, by the way, you're able to make a nice return for your investors all at the same time. So everybody in that transaction is winning. So that was cool to be able to see that, see that take place firsthand.
It's sad seeing those situations in person
It
when
is.
tenants aren't being treated correctly. And you might get into this for those tax benefits or seeing those massive rewards at the end. But when you can improve communities and individual lives on a day-to-day basis, that's what it's all about.
It is.
That's the real gold here.
Yes.
Sticking to that theme of adversity, I was thinking while you're telling your story. So you bought this first house in '08.
Yes.
Probably not the best time to buy a single family
No.
house in the US. Then you buy this quad on basically the eve of a pandemic,
Yep.
and then you have these supply chain issues while you're trying to renovate this whole thing. How has market cycles affected your real estate investing up until now? And since you've seen that with your journey, how is that affecting what you plan to do in the future?
Yeah. So real estate cycles have affected it a lot, in the sense that I know where we're at in that cycle now, right? So we're back to, I'm not saying that it's going to be like 2008 at all, but we're climbing, we're up at the top of the peak, right? We've been there for a while. Nobody knows how long it's going to last. But with all that, you have to keep your buy right criteria in mind, right? You have to know that just because it's risen 20% over the last 3 years doesn't mean the next 3 years are going to be that way. So if you've experienced both ends of that cycle, you're a little more cautious going into it. You're not as optimistic about taking those underwriting principles from the last 3 years and applying them to your pro formas going forward. And then the rest of it, like you said, the adversity. Well, I did an eviction in March, March of 2020. Yeah, 2020, I evicted somebody who only paid the first month that I had owned the property. So I had to go through that whole thing with the legalities of the eviction moratoriums and everything else. And that definitely changed my outlook on things. It's the same as hiring somebody. You want to make sure that you got the right person. Like, it's way better to have a vacancy for a month and get the right person in there than it is to plug somebody in there that can fog a mirror and pay you 1 month, but then not pay the next 3. So I took the same principles from hiring and team building and everything, and I kind of implemented that there as well. And anytime I've listened to my property manager and let them sway the decision one way or the other on a tenant that's been placed, I've regretted it. So at the end of the day, if you have a gut feeling that you're lowering your standards by putting somebody into the unit, don't put them into the unit. Wait it out 2 more weeks. It's not really going to matter at the end of the day. And even if you have a clean unit turn, clean meaning you only spend $500 to do a deep clean and touch up paint, you're still way farther ahead by waiting that 2 weeks, not paying that $500, not having to go through the legal fees and everything else to get rid of them later. So just sit it out. Don't lower your standards. Get the right person in there and make sure that you're holding up your end of the deal, that your expectations for the right person are realistic, right? So those are some of the things that I've used there. And then as far as how it affects my stuff in the future, the same thing. Like, I'm trying to buy stuff, but I'm being realistic, and it's hard to be realistic right now because everybody's throwing crazy money at assets. Like, if something goes in the market, it swings $500,000 the wrong way the moment it gets listed, and I'm all of a sudden doesn't meet my criteria anymore, and I have to be willing to walk away from that. But you also can't be so cautious that you miss opportunities as well. So it's trying to find that balance of, you need to be buying all the time. It's like dollar cost averaging for stocks. You can't just sit here on the sidelines and say, I'm not going to buy till the market corrects, because opportunity is going to pass you by and your money's worth less, 7% to 9% less every year with inflation right now. So you can't do that, but you can't be stupid and jump in on anything and everything at today's prices either. So I try to find that middle ground. I struggle with that every day, just like everybody else does. So it's always recalibrating what is a good deal today, and does this really work, or am I fudging my underwriting here to try to make this work when it really shouldn't?
Yeah, that middle ground, I think, it comes down to patience.
It
And
does.
renting to that wrong tenant, I think, is a common mistake that a lot of landlords made. I know I did early on, and you figure out it's either learn that you can't just rent to someone who shouldn't belong in that apartment, or you're not going to be in the business long. It's
Correct.
your bottom line is just going to be affected so negatively. Getting back to that adversity, I know that we have a lot in common with endurance athletics, and I tend to value that quite a bit, tying into business, getting into a lot of that. And I know you've dealt with some serious adversity getting back into the game. Tell us about that, and how you feel like you'll benefit in the business world based on that.
Yeah, so that's a great point. Your mind really controls everything around you, right? So the moment that you understand that you have to control your mind and that you're capable of more than what you think you are in every essence of it, right? And it's all defined, your capabilities are all defined by your mindset. So that's where I think the correlation is between endurance sports and what we do. And at the end of the day, that's also why you shouldn't run away from a rough situation necessarily and look for the easy path. The easy path won't get you where you want to go. It really cramps your space, for lack of a better term, as far as what your capabilities are, because you haven't been forced to stretch your mindset at all. So my thought process around that is that if you learn how to work through things as they happen, whether it's my heel hurting at mile 5 of a 50 miler and then rolling my foot underneath me at mile 20 and I still had 30 to go. If you can figure out mentally how to get yourself to continue to make one step forward, it's like, hey, at the end of the day, man, you planned on being out here 8 to 10 hours. You knew it was a 25-mile loop. You're going to see the finish line one time that didn't belong to you. You hadn't earned it yet. You had to walk past it and keep on going, right? If you can prepare yourself for all that and set your expectations realistically and look for the positives in it, and during that process just enjoy the journey. Like, was it tough? Absolutely, it was tough. And for those of us that have done stuff like that, there's people that have done crazier stuff, so there's always room to grow or shrink, however, wherever you're at. It's all relative. But if you can do the same thing with real estate, right, of getting out there and looking for something that challenges you, I'm not saying go do something stupid, but don't settle for a duplex. Go buy a quad. I wish I'd bought something bigger than a quad, because the only thing that didn't translate over was the valuation model. I was still stuck on that sales comp approach. Whereas if I'd gotten a 6 or 12 unit or something like that, I would have had the full experience of what multifamily really looks like on a larger scale, still with that smaller price tag, right? But find something that you got to find that balance that stretches you, but doesn't put you in a stupid area. There's nothing that is good about endorsing jumping into a scenario that you're not prepared for. But the same token, is not okay to jump into something that you're comfortable with. If you're comfortable with it, you should step a little farther. Find something that gets you on that edge of uncomfortable, but not into that territory of being stupid and making a mistake. And if you can do that over and over and over again, you're going to constantly grow. Whereas if you're just comfortable all the time and you never want to put yourself in an uncomfortable situation, you're never going to grow. If anything, you're going to shrink. So I think that applies to sports, your spiritual life. It applies to everything. If you can just get that discipline and intentionality, if you get those two things down, then I would be in a much different place if I'd gotten those down way sooner. I can tell you that.
No, I love that. I love that. And ultimately, all this adversity that you've overcome, that's going to be great preparation. You're going to be a awesome partner with anybody who you get involved with, because there's going to be challenges in these big deals, and you're going to be able to overcome any of these challenges. So I think it just prepares you to be the best partner that you're going to be able to be. Isaac, this is the Collecting Real Estate podcast. So they say you have to have 3 of something to make a collection. So we've got 3 questions for you. Number
All
1,
right.
in 5 words or so, what's the most important thing you've learned since you started collecting real estate?
The 5 words is the problem there. I would have to say, for me personally, being somebody that's over analyzes everything, I would say don't overthink it. That's the most important thing. Learn enough, but don't try to get it perfect, because you're never going to get it all. And if you overthink it, if you look at the people that are the most successful in it, they're not the smartest necessarily. And that's not downplaying them at all. But I'm just saying that IQ is not a function of their success. Their success is a combination of taking action with the appropriate amount of information. And so if you can find that tipping point, don't overthink it. Don't feel like you have to have everything figured out. Get as much of it as you need to, get the 70% or whatever that 80-20 rule is, and then jump in and get the rest of it. The rest you're going to get as you learn it. So that'd probably be, for me personally, that's been the biggest lesson I've learned in real estate, is don't overthink it. And it's something I have to keep reminding myself every single day.
Excellent.
What I like about your answer there is to not overthink something, you have to simplify it. And in order to get
Yes.
that answer in under 5 words, you had to simplify the answer.
Yes. Correct. It's hard to do, though.
Yeah.
Number 2, 1 to 2 year personal goals.
Oh, man. 1 to 2 year personal goals. Does it have to be real estate related, or every area of life? What are you looking for?
It's supposed to not be real estate related.
Yeah, non-business. Hey, it could be. I know you're healed up now. What's your next endurance event?
Yeah, so I probably won't ever run this year. Honestly, I probably will take some time. My goal for this year is to get back to 10,000 steps a day with pain free. So all types of environments where I can play with my kid, play soccer and stuff, and not hurt myself. And then by the fall, hopefully get back on the road bike. I've got a sweet road bike I've been missing, and I've got Zwift and a smart trainer, direct drive trainer, and everything. So for the winter, it sucks seeing that down there not being used. And I've put on 15 or 20 pounds because I'm still eating like I'm doing stuff that I'm not doing anymore. So that, fitness wise, that's my goal: 10,000 steps a day, pain free, not impacting my lifestyle with my family, and then back on the bike this year. And then I'll start adding volume into the bike. I like bike rides that are 60 to 150 miles. That's my sweet spot. And so I'd like to slowly get back up to that point. And then next year, I'll get back into running. However, the one thing I want to do this year that's not involved with that is do a hike. So my mom is 68 years old. She goes and does bike classes, spin classes and stuff twice a week. She hikes usually at least one big hike a year. She'll do in the Appalachian Mountains on the trails for cystic fibrosis, because we have some family members that are affected by it. So one of my goals is, I know I've missed several opportunities to do this already, and I just never thought about it. But I want to hike that with her this year. I want to be able to go down there and at least do one of the training hikes with her, because I don't have that many more years. I mean, 68 years old, she shouldn't be doing it in the first place, but I'd like to have those moments with her while I can. So that's more important to me than having a marathon or something like that for this year. Fast forward to next year, so that year 2, I want to get back into running races and stuff. Maybe I'll stick with Hoka's or something that has higher cushioning going forward, so that I can mitigate the issues with that ankle and not stress it too much. But I only got 3 marathons under my belt in 2018, a 50K, and I had the 50 miler in 2017. And I barely scratched the surface of what I'm capable of, and I really like to get back. And slowly, I jump into everything too fast. So I went too fast, too hard. I didn't give myself time to learn how to listen to my body and know when those red flags are that you're supposed to listen to versus the ones that you push past. And mentally, I'm stronger than my body, so I push past all of them. So I'd like to do it right next time and not do that, and actually see what I'm capable of. So more marathons. I'd love to do something over 50 miler at some point, but it's balance holistically. How do you fit all those things into the week when you have a young family? Maybe I won't do the 50 miler anytime soon, but that's year 1 and year 2. Get back to being healthy and not affecting my personal life with my family that way.
Awesome. I love that answer. Geez, I'd love to be able to do a race with you down the road. I know
Yes.
that you're friends with Matt Dunn as well. We're going to be
Yep.
doing that 50 miler in July together. And I'm so looking forward to the race, but just as much as the race, I'm looking forward to just doing it with him.
Correct.
Just based on that relationship, I'm so excited for that. Last question: how can we and the listeners assist you, and how can we contact you?
Yeah, so you can contact me on cell phone at 989-439-0105. Hook up with me on Facebook or Instagram. or you can reach out through the website as well, which is generationalcapitalllc.com. You can go on there and punch in your information and submit it, and it'll come to me through HubSpot, and we can connect from there as well. LinkedIn, I'm very active on LinkedIn as well. And then as far as helping, I'm constantly looking for ways to add value in other deals and other markets. So right now, I am more of an entrepreneur than an investor, right? And I recognize that after last year when I deployed that $100,000, I'm like, wait, man, I'm thinking about this as an investor. I'm not an investor. I don't have the capital stacks of an investor. I'm an entrepreneur that needs to maximize the return on every dollar I deploy. So I'm much more focused now about being actively involved in every deal. So I'm good at asset management, good at underwriting, good at operations. I believe right now I'm in that sweet spot where I could raise $1 million without much trouble, somewhere between 500 and $1 million. And so anything that I can do to add value to someone else's deal, if you find a deal in your market and it's great and you feel like you're short on any one of those areas, then I could help you with it. I'd be happy, if nothing else, just to look over your underwriting and see if there's anything that catches my eye on, and if nothing else. So always looking to add value, whether I get in on the deal or not. If I add enough value, I'll be in on the deal. That's how I look at it.
Well, it's a lot of value. That's a lot of value. Great answers, Isaac. Appreciate you being on the show, and look forward to speaking with you very soon. Thanks again.
Yeah, absolutely. I would say, since we're cutting the rest of this out, I always enjoyed training more than I enjoyed the actual races. So try to find, and my theory behind it was that being analytical, I always did more. You do 95% of your time is all the training, right? It's all the journey to get to the point to where you can toe the race line. And the actual event itself is such a small portion of that. So if you can get to the point to where you enjoy that and you get some of those training runs in with partners at the same time, whether in real estate or whatever, you can have conversation, learn from other people's experiences. Like if you can't get to where you enjoy the training, you're missing the boat. That's where it's all at. That's where most of your volume's at too. And then when race day comes around, it's so much easier because you're well prepared for it because you actually enjoyed the training and you did as much as you should have. So stoked for you guys to run your 50 together, and we just need to get Lane Babin in there at the same time. He's already hitting those numbers as well and everything. So there's a small ultra community coming together within Jake and Dino. They just don't know it yet.
Yeah, the challenge is we're all on different ends of the country, and to get us in one spot. So I'm so grateful that Matt is making the trip up here in his RV, to the Northeast. So
Yeah.
when he mentioned that, he did me a favor, and he went out and researched, found a race. Says, "Hey, I found this one." I'm like, "Okay," and sends me the link. I sent it to my wife. She signed me up, and I'm like, "Uh-oh, 3 months away," but we'll get it done.
Better get traded.
We'll get
That's
it
awesome.
done.
There's one in Florida. You'll do fine. There's one in Florida called the Skydive Ultra. So your first mile is the fastest because you literally start from the airplane. So you jump out of the airplane, you skydive, and you land, strip your gear off, and you start running your ultra. And I mean, it's all flat, but I think last time I checked, they have up to 200 miles, and they have as low as a 50K, I think. So I always wanted to add that to my list as well because of sensory overload. I mean, if you take that, towing the starting line and change it to jumping out of an airplane to start your run would be amazing. But yeah, we can find something.
Steven, you got to stop going like this and start going like this.
You're going to it next. You just don't know it yet.
I like 2 to 4 mile bike rides. Back to
That's fine.
the bike rides you
That's
were talking
fine.
about.
That's fine. Everybody starts somewhere. I smoked for 14 years, which is what got me to running. Was I wanted to, as I quit smoking in 2010, I tried jogging an eighth of a mile at a time, and I knew that if I make my lungs blow up, if I could feel my lungs just hurting like that, that would remind me of why I was working to quit smoking, right? So that's what got me into running. And then over the years, it was all the way from 2010 to 2015, 2014, I never did anything over a 5K. November of 2014, I did my first turkey trot 10K. Wasn't trained for it, not prepared, hurt like hell for 2 weeks after. And then 15, I got intentional. So in 14, November 14, that was a 57-minute 10K. I mean, it's just abysmal. And then in spring of 15, where I actually trained and did some prep stuff for it and everything, I did 46:31. So I shaved off 12 or 13 minutes, 7:30-ish pace. Then November 15, I did a 39:20. And that was all all training intentionally, starting to do speed work and intervals and tempo runs and stuff like that. So that's where you can get into all that to say that I started exactly where you're at. And everybody
I
quits
love
running.
keeping this recording.
Everybody quits running before they ever get started. So you have to do it enough to get to
In
enjoy it.
college, I would do 2 miles in 12 minutes pretty much every single day in college, and I'll
Dude,
still
look
throw
at
out a
you.
4 or a 6 every once in a while now. But I've just never had the urge to go over like 10 miles.
Sure.
I like to go at a good pace,
Yep.
but once I hit 4, 5, 6 miles, I'm bored.
Yeah. So it's different. That's where you like. I had some of my best prayer time and thought time and everything during long runs, especially as I was training up for the 50 miler because your body is doing its thing. And I never did earbuds or anything like that. I always wanted to hear my foot fall because I could tell when my form was getting sloppy. I could hear my breathing. I could tell when my shoulders were slumping and my neck was falling. I could self critique all that time. So I constantly had this informational loop going where I was taking everything in the environment around me, whether it was in the trails or whatever. I could hear cars as they were coming. And then also when I wasn't busy listening to my feet or adjusting my cadence and stuff like that, I had that chance of just mental clarity. There's nothing else. There's nowhere else that my mind needs to be right now. It's literally with me on this run, and I could take that time to think through whatever it was that I need to think through mentally that I never gave myself time or bandwidth to deal with otherwise. Because any other point of life, we're always jumping from thing to thing, and you never really sit and give yourself that time. So to be able to do the exercise, the physical exercise that you needed, and give yourself the mental space to go through things, whether it's prayer time, devotions, whatever it is that you're thinking over, is amazing. You put those together, it's like very seldom can you get so much benefit out of a 1 or 2 hour block in your day.
Wow, this is cool because when I started seriously running, probably, at about 40, it was about uh, 11 years ago. For the first 5 or 6 years, I didn't run with anything in my ears, and that's rare also. Most people, have music on, and I started to a little bit more now. I'm listening to podcasts, things like that, just to, get some podcasts under my belt on that type of net time. But I also don't use, a watch or anything like that. Do you have the yeah? So do you do the Garmin or anything like that? I just go, nothing in my ears, nothing on my wrist, nothing.
I do. So the reason I
Okay.
do it is because there's so much data stuff because I know I push myself too hard. So when I actually have like when I was training for the 50 miler, I knew in the woods that my watch was going to be worthless. I could never count on my pace or anything on the watch because when you're in the woods with the tree coverage and you're doing switchbacks on top of each other, it just doesn't keep up. The satellites can't track it as well. So I did all my runs for my 50 miler off a heart rate training plan where I wore a heart rate strap all the time, and my goal was to stay below 150 beats per minute. So anytime I go up over 150, hey, it's time to power hike or eat a sandwich or whatever it is. But I get my heart rate back down because I knew I was training for 8 to 10 hours. So staying below 150 on my exertion, my heart rate and everything meant that I could go much longer. Right, once you start going up over a certain point, everybody's body is different, but it's not sustainable for a long period of time. So for me, having that data meant that I could actually be more focused and not injuring myself. Because when I had a bad day, I could look at my heart rate and be like, man, my pace wasn't that great, but my heart rate was high. Well, okay, what else did I change? Did I get enough sleep? Did I not get enough sleep? Did I hydrate well enough? What else is there? If you're feeling that resistance, it was giving me data to justify adjusting my training to what was my body was actually dealing with instead of saying, letting my mind run away with it, saying, push past it, you went. So having the data helped me a lot. But I'm also very analytical, like we said already. So it's one of those. I liked it. I used it for that. And I would recommend it to other people, especially if you're going to do it to start with. If you don't have any data at all, it's really hard to know as you're getting into it how far is too far. So, I mean, typically the healthy thing is 10% gain every week. Never go 10% farther, 10% faster, none of that than you did the week before or the 2 weeks before. So I did that, and then every third weekend, as you saw in the training plan, I would drop back to 60% of my previous training volume. So if I had done 40 miles over the weekend before, I would drop back to 60% of that, so that you give your body one down weekend, not inactive doing nothing, but one lower training volume weekend where it can recuperate. Because you can't just build. You have to give it some time to rehab in between. So I got those from other people here locally that are huge ultra athletes, have done Western States and 200 milers and stuff like that. And those are the tips that worked for them. So I just incorporated it to my goals. And it never was about pace for the 50 miler. It was really just about enjoying it and not having the wheels fall off. Literally, the wheels fell off, but I still enjoyed it and still hit everything that I was planning on hitting, and then a little extra there with my ankle. And at the end of it, I would still do it all again. So it's one of those, as long as you know what your goals are, having the data helps you frame out how you approach those goals, in my opinion anyways.
Well, that's interesting. Here was my style 10, 12, 13 years ago, getting ready for Boston after I qualified, fortunately. But before I qualified, it was running with my cell phone, knowing that I was going 9 miles. So I want to go 7 to 7.5 minute clips. So I'm able to just look at the
Yep.
time, see if I was on track. But I had to have this cell phone because I was a property manager and I was so mental.
couldn't
I
get
was
away.
still the emergency guy, to where I had to make sure that if someone called me, I could see that they were calling. So it was interesting to say the least. But hey, it's worked for me. I still just run with my cell phone. I will listen to
Good
some
for you.
podcasts and a little bit of music from time to time. But I'm
Yep.
hearing that in the woods that the watches at the Garmin's not going to work much anyway. So I
Yep.
just listen to my body, and
Yeah, that's
it's all
good.
up here. It's all up here.
That's good. Do the same thing
It
for
was
your
it was a lot
race.
easier to run when I was living in Florida compared to in New York. April 20th, we still have snow on the ground.
Yes.
I guess I'm a little bit of a fair weather runner.
So I enjoyed running through the winter. So I think it was 2016 when I started running through the winter, and basically it was one of the things when you're in Michigan and it's so depressing. It's cold. There's not anything you can do outside really, unless you're doing winter sports. It's one of the few things that you can step outside and still do, and you don't have to put that much clothing on, because once you build your heart rate up to a certain point, like my PR half marathon was at 9 degrees. I've never beat that PR because my body never warmed up. Your body never warmed up as much as it normally would, so therefore your heart rate never peaked. So I was able to hit a pace on that I have not been able to match yet, just off of that. So it was one of those, like, you can get outside, you can see it's a different kind of beauty outside when everything's covered in snow. The worst that I ever had to do was put 8-inch sheet metal screws, stud the bottom of my shoes around the perimeter or whatever, so that I could have extra traction. But you get out there and it's like, man, once your body acclimates, the first mile or two, you basically, I always joke about your thermostat's not on, right? So your fingers are cold, whatever extremities that you have that are normally hurting, you're feeling it for the first mile or two. After that, and your body catches up and the blood circulation hits and everything, then you're fine. Like, your lungs feel good, your fingers start warming up, and from there on, you're just back into that zone again, and everything around you looks different. So if you shut yourself in to just training on the trainer in the basement during the winter and you can't get outside and everything and have some of that time, to me, it's debilitating mentally as well as physically. So I enjoyed running through the winters.
Wow,
Take your word for it.
it's more of that adversity. You're in Michigan, I'm in New York, and when I was doing it, training for it was Boston's in April, so it's winter training, and
Yes.
yeah, I was doing the same thing. You go out, you got 2 layers,
Yep.
and you suck it up for that first mile because you're freezing your ass off,
Yep.
and then after that first mile, it's like, all right, now I can run.
Yes. We're gonna
Wow,
get you there, Steve. We're gonna get you there.
Yes.
No, I'm gonna be in Florida in the winter, and I'll be running too.
There
Just
you go. See,
warm.
that's the way to do it. See, everybody else whipped
Yes.
out during training runs. We would have training runs scheduled, weekly stuff. And people are like, oh man, it's raining, I'm not coming. I'm like, dude, what are you going to do on race day when it rains? Get out there, freaking do the workout, get your head comfortable in that space. You'll feel better afterwards. And then if you have crappy weather on race day, you still can hammer it out, whereas everybody else is going to be up a creek.
Rain's kind of nice, but if it's below 40, nah.
That's different. That is different. You have to get acclimated to it.
You got to
This has been
suffer.
fun. Summer too, yes. Summer's where I start pouring as much water on top of my head as I do in my throat.
I was going to say, I said you got to suffer. You got to suffer
Yes.
to get that result that you want. So we deal with that adversity at mile 35.
Yep.
That's where it kicks in, right?
But those endorphins afterwards are totally worth it too. Like, you don't get the runner's high without going through the runner's low.
Isaac, we could go all day long.
We could. We probably shouldn't. I have a 10:30 I need to jump off for.
All right. We'll talk soon, man.
Sounds good. Keep me posted. Thanks again for letting me interview on the podcast. I had planned on doing 3 this year, and I've knocked 2 of them out now. So if
Great
you have
having
any
you.
recommendations for another one, let me know.
Awesome.